So what's up everybody, hope you guys are doing good. So welcome to the video, and I'm gonna be so brief, but I'm gonna show you what you need. So this is for mainly the beginners. If you're beginning forex trading, I'm gonna take you through a course, okay? And the first course that I'm gonna teach you, I'm gonna teach you what you call candlesticks, okay? Candlesticks, you get that? So this means just like candles. Now, what you need to understand is candles are very powerful in the forex market, and you need to understand them before you understand any other thing, okay? So in this video, be ready to learn about that. And I want you also to go and do more research about what I'm going to teach you about candles mainly, okay? Now, let's move on, guys. Let's move on. So in forex trading, we have what you call the bullish candle, okay? The bullish candle, and it simplifies the bulls, meaning it simplifies the buyers, okay? The buyers, okay? Now, in the bullish candle, we're gonna use, most people use different colors, but I'm gonna be using the blue color to represent the bulls or the buyers. Now, this bullish candle represents price going up. So whenever you see the buyers, you can use any symbol like, I'm using like a green color. So this green color, it's gonna be meaning the buyers. Now, if you see this, this is a bullish candle. I'm gonna be drawing again. Now, let's say this is a bullish candle, okay? Okay, this point here is the body of the candle, and the body of the candle, with the time, you need to learn that the body of the candle, you can use it to know the strengths of the buyers and the sellers. Then we have some things like this. We call it the tails or the wicks, or the wicks. These tails or the wicks represent rejection in the forex market. So that's just a simple bullish candle. Now, when you talk of the bullish candle, it means the buyers are trying to push price up. So we use this candle to signify the buyers pushing price above. Okay. Now, I want you to realize one thing. In the markets, there are always prices. The sellers are trying to come in and the buyers are trying to come in. Now, let me show you something again about the buyers, okay? Make sure you understand this video carefully. We are only dealing with the bullish candle, okay? Only the bullish candle. Now, in the bullish candle, the buyers always open price from down, okay? This is the opening price. Then they push price up and they close above. This is the closing price. Let me give you an example, and this is the body. It's like going to the market and you want to buy something from a seller. That bargaining power is always the fight between the buyers and the sellers. When the buyers open price from here, they're trying to push price up, the sellers are also trying to push it down. Okay? That's why when you find bullish candles with the rejections, this is the tail. This is the rejection from the sellers. Okay? And every candle represents its own time frame. So let's say if you go to your chart, if you're in 1 hour time frame, 1 hour time frame, it means every candle is going to take 1 hour to be formed. If you go to 4 hour time frame, it means every candle is going to take 4 hours to be formed. If you go to the daily time frame, it means every candle is going to take 1 day to be formed. Okay? Now, I want you to realize one simple thing, guys. Now, you can use candles to predict the future of the market. Okay? Good. Now, let me show you something. I want us to talk about this too. We're only talking about bullish candles, okay? And I told you bullish candles represent the buyers. We had a theory about the bullish candles. Whenever you see a bullish candle, and you see it came from the word bulls, okay? When bulls are fighting, they try to push their heads up. You get that, eh? So that's where they brought that thing from. It's bullish candle, meaning they're trying to push their prices above. Now, I want you to realize one thing. Have you seen, let's say we are dealing with a daily time frame. And this is a bullish candle. I told you the bullish candle opens from down and closes from up. Okay? This is the, like, when you see opening and closing, that's like the decided price. It's like a confirmed price. Like going to the market to buy something, you bargain until you come up into an agreed price, and that is your price now that we're talking about. Now, let's go slowly. Now, I want you to, let's say this is the daily time frame. And we have this candle, and this candle, this bullish candle, it doesn't have any tail. It doesn't have any tail that I show it doesn't have this. Or the wick doesn't have that. It's just like this. This type of candle shows that the buyers opened price from here and they closed immediately. So there was no rejection from the sellers. Okay? Then let's look at this candle here. This is a bullish candle. We have a tail or a wick here. Okay? This tail here represents rejection from sellers. Remember, when buyers are trying to push price up, Sellers are also trying to push it down. It's a fight between the buyers and the sellers. At the end of every time frame you're dealing, every candle is going to explain to you that these buyers were strong or the sellers were strong. Now, let me give you an example. I'm going to look at some few candles here so that you understand. Okay? I want you to understand candles very well, because candles are very important in the forex market. Look at this type of candle like this. Let's say we have that bullish candle. It has got a very long tail. This tail is longer than the body. This is the body. And this is the tail or the wick. And I told you this tail represents rejection. The buyers have opened price from here and they have closed from here. Now, I want to explain to you one thing about this price. Buyers opened price from here and they pushed price up to here. That was a rigged price. Like, let's say you're going to bargain something and you say like this, okay, for me, I'll give you 3,000. Okay? That was just, the price rigged up to here, but the sellers dragged the buyers to close price at this zone. So meaning, buyers had pushed price all the way up to here, but they couldn't hold the price here, so the sellers had to come in and they closed price at that point next to the opening price. Meaning, the longer this tail, it means the stronger the rejection from the sellers. So if this tail is too long, it means the sellers are already starting to come into the market. Okay? Even if this is a bullish candle, let's say like this, it means there's a strong rejection from the sellers because the tail is longer than the body. This is a rejection from the sellers, meaning the buyers had pushed price up to here, but they couldn't close the price here. It's like pushing price up somewhere, but you can't close price at that zone. You understand that? So that is a simple way that I'm trying to explain to you. Now, what have you learned in this class about the bullish candle? You have learned that you can use the candles to predict the future market. If you're using high time frames, like, let me give an example. This is a bullish candle. But this bullish candle, it has got a long rejection, meaning the sellers have rejected the buyers badly. Okay? Then after that, you always expect a bearish candle. Okay? When you see a bearish candle now like this, meaning the sellers, okay? It means that yes, the sellers have already come into the market. Why? It's because they showed us rejection from this zone. Okay? They showed us that, okay, we are already in the market. The buyers opened price from here and they pushed up to here, but they couldn't close price here, and the sellers had to drag them to close at this zone. So this is all a rejection price. They rejected the buyers from here. So the sellers had already come into the market. Now, let's go and talk about the bearish candle. Okay? The bearish, I'm gonna use the red mark to represent the bearish candle. Okay, I don't have time to make all these videos, but when I get free time, I always try all my level best. Okay? Now, we're gonna use red color to represent the bearish candle. Okay, this is a bearish candle. The bearish candle opens from up and closes from down, the reverse of the other one. Now, why? It's because sellers are trying to push price down as buyers are trying to push it up. So it's a reverse of the other one. Now, if this is your opening price, like that, and closing price, this is the body of the sellers. The sellers, we also call it the bearish candle. Okay, it came from the what? The buyers. Okay, now, if you look at this type of candle, it shows that the sellers are in total control of the market. Now, they open price from here and they close from here. Okay? Imagine having another opening price here and then they close at this zone here. But there was a long wick down. It means the sellers had pushed price up to down here, but they couldn't hold price here. So whenever you see a rejection down here, it shows that the buyers have tried coming into the market. We call it the tail or the wick. So you can use these things to know who is stronger in the market. Because remember, for a candle to be formed, it's a fight between the buyers and the sellers. Okay? Now, let me explain to you something, guys. I'm going to show, I hope you have understood now something. Now, I want us to talk about something now. We talk about the bearish candle. Now, if you look about the bearish candle, let's say you have this bearish candle like this, which has got a long wick. This rejection is from the buyers. It shows that the buyers have started coming into the market. So the longer the rejection, the stronger the buyers. If the rejection is longer, the tail is longer than the body, it shows that the buyers have already come into the market. You understand that? But if you find a candle which is a bearish candle like this, and there is no tail, it shows that the sellers are in full control of the market because we are not having any rejection. You get that? They are in full control of the market. As simple as that. That's how simple you can read candles, guys. So I want you to understand, not just crab. understand. You can, how you're going to determine the strengths of each candle. And candles in high time frames are very important. Candles from daily time frame, weekly time frame, and the monthly time frame. Because meaning every candle takes 1 day to be formed. Every candle takes 1 week to be formed. If you're in the month weekly, it takes weekly 1 week. If you're in the monthly, it takes 1 month. So be careful about this. Okay? High time frames are very powerful. Okay, because they give you the future price. Because once you see a candle in week, let's say you've seen a candle like this, a bearish candle like this in week, which shows that the sellers are very strong because there is no rejection from the buyers. Then you still expect another bearish candle because the sellers are still very strong in the market. Okay? Now, let me hope you've understood just about candles. That was a very simple video, and let me know you've understood this. Thank you so much for watching the video. I wish you all the best, guys. See you next time. Bye.